Hello everyone and welcome back to Laberinto de Divisas. My name is José Ricaurte Jaén and now we're in the North American session. Today is Monday, January 15, 2018. Please remember that all the content in these videos is for educational purposes only. It does not indicate that we're offering you by any means an offer to sell or buy any currencies. At the same time, all these videos are not recorded for sort of any kind of personal advice. Just keep that in mind, and always remember, past performance does not indicate future performance. Okay, and we are recording live from Dubrovnik in the Republic of Croatia. Let's begin. So we're going to talk about a little bit of the NAFTA, the North American Fair Trade Agreement, and just to give you an idea what we have on the headlines on the news outlets. And we're going to take a look at the website, and just to give you an idea, the information is coming from BTMU, which is the Bank of Tokyo Mitsubishi UFJ. Those of you that don't know what it is, it's a bank that was created in January 2006 after the merge of Bank of Tokyo Mitsubishi and UFJ Bank. Very important, just to keep you as far as what it means, who is who, right? So on this one, we're at the website. The website we're looking at, it's efxnews.com, and this site will help you if you're interested of that kind of sort of, what's going on between investment banks or not. This site will give you all that information that you need. Of course, they are giving you a lot of free content that has quality, has value. You can understand it, you can apply that information. But if you want to go a little bit further as far as trading signals by banks, by institutions, then this is the perfect place for you. They have a monthly membership. You can find out more information on the subscription link. And if you're interested, go there and get that information. Now, look at what we want to. It's what is the risk premium as far as like what may not happen with the Canadian dollar. As far if, for example, a week ago we have a nice spike. It was almost like 150 pips, pretty much. Well, actually 200 pips to support the US dollar, based on the fact that some officials were saying, political officials were saying that it was pretty conclusive that it was a 50% chance that Donald Trump, the President of the United States, will unplug, pretty much leave behind NAFTA. And that actually took a toll on the exchange rate for the US against the US dollar against the Canadian dollar, and the US dollar versus the Mexican peso. Now, we're going to focus our attention here what's happening as far as if, for example, if the market is pricing BTMU, they're saying basically if markets sort of start feeling there's a real risk here, it can go as high as 5%, and it could push the dollar, US dollar versus Canadian dollar all the way back to 130. Now, we also want to bring to your attention that ING, they have been on the side of supporting a 127 US dollar versus Canadian dollar in the first quarter of 2018. Now, this may not happen, but pay attention. They're also adding the fact that with all the drivers, the increasing price of oil will support also dollar Canadian all the way back to 120. Now, I'm going to go back to the MT4, give you a few heads up as far as technical analysis. So the first one I want to take a look at is like, if we just plain and simple see what's going on. First off, we know that sort of this can be you have here, this is one shoulder, it could be the right shoulder, and of course we need to know what's going to happen in this section. This is where the real dynamics will start playing in, and if prices break below break and close below the 124 level, this currency pair will be in serious trouble in 2018. Now, the reason for this is that first, the next level to consider, it's a big push all the way back to all the 119.70, 119.30 level, and after that pay attention right here. As you see, we'll see we're in the monthly chart, all the way back to between September 2013 and May 2014. We have a very important resistance that now turns into support, the 112.50. You cannot discount this to happen. These are real levels to pay attention, especially right now, the 124. Wednesday, very important day for those of you trading the dollar, the US dollar versus Canadian dollar, because we have the decision of the Bank of Canada, the BOC. Now, consensus is telling us there's a 0.12 increase that they're expecting, and probabilities are high as 84. After the announcement of that 50-50 opportunity of Donald Trump to just crash all the way the NAFTA agreement, well, basically it went all the way to 57% probability to happen. Now, NAFTA or no NAFTA, there's some headlines on Twitter saying that the Bank of Canada will continue because they have their own risk of inflation to protect their economy, so they have to protect themselves, and they will continue their hiking path. That will support a stronger dollar Canadian, and we can go as fast as all the way down to 119 in the next weeks. However, if they decide to hold and not to increase rates, that will meet, for example, the same rate, and after that having a dovish. Remember, the tone after the hike is very important. It's a hawkish. They're bullish on their economy. They're dovish. They're bearish on their economy. That can be the case, and you can have an increase in rates, in interest rates, and then a dovish scenario, and that is not good for the currency and will turn into sells. And remember, at the same time, it will help the fact that we already have a very beat up US dollar. You can look where we are right now. So this is something that we must consider as a scenarios for Wednesday. Now, of course, you want to go back and take a look, and the last chart I want to share with you is this that from Alba Puero. She's from Spain, and basically their trade room, in Spanish, Sala para Traders, basically they use this combination of what they call the on the wolf, on the wolfy, wolf waves, if you want to put in perspective. That has nothing to do with Elliott waves. Now, if you take a look at this, here is the last extension is all this. This is the duplication. If prices, you can see here, we have interesting information, Fibonacci, all this. If prices close below, you will have this support here playing important, the 120. It's there. But if things get very bad for the US dollar, we can go as low as this level, 111 in 2018.